if the audio is sharing. Let me know. Can you hear me? Like what's the deal here? My hair is crazy. My beard is crazy. Morning, just waiting to see. Oh, okay, thanks. Appreciate it, Evan and Mark. Jazz, DMK, thank you. Good morning. I don't know what happened yesterday. Literally didn't change anything. Silliness. Anyways, good morning, everyone. I hope you're all doing well. Welcome to our channel at TRADEPRO Academy. Hello, it is Friday, Opex, October 20th. So Opex, we have monthly Opex. These are options expiries that happen on a monthly basis. Every third Friday of the month, what happens is all options will expire, right? All options that have monthly expirations, which include indices, they include individual stocks, right? And on those expirations, generally what happens is that market makers have to reposition, right? You see hedging, you see different gamma exposure, and a lot of changes, which brings out volatility, chop, sideways movement, theta burning, right? A lot of different aspects that create, excuse me, create not the most favorable positions to trade in, especially when you're talking about options. Things can whipsaw back and forth, which just look to kill every position on the upside and the downside. So we can expect something of the sort in the general equity market as well when we talk about futures as well. So a little warning to everyone that's day trading, especially options, but futures as well. Just take it easy today. I've had kind of a dicey week, right? Starting down on positions, getting up by the end of the day. Just a very big battle in general. So that I've been sharing with our mailing list, right? But generally speaking, in a day like today with Opex coming around, I'm realistically going to be trading much smaller size to wrap up this week, right? You don't want to make a single day your week, right? Fridays especially. They're difficult for a lot of people, right? And a lot of people that may have not been doing so well throughout the week, they look at Friday as their be-all and end-all savior, usually just get long and ride the waves. So we'll talk about the general market and the expectations today at the end of this, but let's look at a few different things, right? Yesterday, one of the main concepts was Jerome Powell spoke, right? Jerome Powell talked about the monetary policy. And generally speaking, he did have a more hawkish tone, right? There was a little more hawkishness in the things that he was saying. Not necessarily specifically, because right, he says things in a more vague manner, and inadvertently creating this hawkish tone, which opened up a lot of the downside yesterday into the closing session. There was a lot of volatility, number one. Number two, a lot of the downside opened up, and we broke a lot of key levels, especially into the close, and we pulled down a little further on the overnight session. So the U.S. economy's strength and continued tight labor markets could require still tougher borrowing conditions to control inflation. This is what Fed Chair Powell said yesterday. Through rising market interest rates, though rising market interest rates could make action by the central bank itself less necessary. So appearing to align himself with other Fed colleagues who have recently spoke. Yesterday there was a plethora of them. I don't know what they had planned, but there was so many. There's more today as well. Who had recently said that the bond market is now doing some of the central bank's work for it. And Powell, in remarks to the Economic Club of New York, agreed in principle that the rise of yields was helping the further tightening financial conditions and at margin might lessen the need for additional Fed rate increases. So it wasn't a necessarily explicit endorsement of that view, but financial markets seem to read this as very hawkish and bearish undertone. So as Powell spoke, investors leaned further into the bets that the Fed is done raising short-term benchmark interest rates, and futures that settled to the Fed's policy rate are now pricing in less than 1/3 of a chance of another rate hike this year. So we got the November and the December meeting, right? There's no meeting this month in November. This month in October. What am I talking about? So it's down from about 40% before he spoke, and the interest rates on the 10 and 30-year bonds rose as Powell did make his remarks. I haven't checked the 10-year yields today, but yesterday I think they were or this morning, very early in the morning, they were 4.992 or something. Oops, let's go. Okay, so they've pulled down since we pretty much very, very shy of that 5%. And I think we're coming into the region where they actually top, which puts some upside pressure on bonds. But trying to call the tops on these things is a very difficult task, realistically. We also have, We also have earnings on big tech that comes out next week. That's going to be very important. This is an important distinction because Powell noted if bond investors were raising long-term bond yields only because they thought that the Fed was about to raise its own short-term policy, the central bank would have to follow through, or long-term rates would fail. So this appears to be a very different dynamic, and one that Powell and several of his colleagues have suggested in recent days could begin substituting a market-driven tightening or a market-driven tightening of credit for changes the Fed's short-term funds rate does. So financial conditions are tightening, and there's no getting around that. It moves the needle towards the Fed doing less rather than more, and I think that we're at a plateau here. This is what Sean Osborne, Chief Foreign Exchange Strategist with Scotiabank, said. So we saw Powell's slightly more hawkish remarks on yesterday's session, which drowned the market to the downside. In terms of some of the other news that propelled, where is this? Yesterday, we had some news out of some of the EV chip makers. We had some news out of solar, especially yesterday, which was very interesting. A lot of solar names down drastically. But first and foremost, right, exports of chip making metals, gallium and germanium have been subdued, right? China's stepping up its efforts to maintain its manufacturing dominance by restricting exports of graphite, a key material used in electric vehicle batteries. So Beijing's move comes days after Washington unveiled its new restriction on AI chip exports to China. So Beijing will require special export permits for 3 grades of graphite starting December 1st, the Minister of Commerce and the General Administration of Customs said. So temporary controls on 5 less sensitive graphite items used in the industry, such as steel, metallurgy, and chemicals, were dropped. So the new curbs are conducive to ensuring the security and the stability of the global supply chain, and conducive to better safeguarding national security and interests, the ministry said. So it's clarified that it was not targeting any particular country. Top buyers of graphite from China include the US, South Korea, Japan, and India. So we'll see how that bodes. We still have big chip earnings that are coming out. This recent news is most likely not going to affect them, but we'll see the forward guidance in response to some of these aspects. All in all, looking at this market, right, let's go back to it. You can see my screen here, which is a nice little addition, but generally speaking, we do have Opex today, right? Opex options expiration is known for more volatile and erratic movements and slower movements at that. Right now on the S&P 500 futures, you can see my monthly and my weekly volume profiles here. The one on the right that I'm moving right now is the weekly, and the one on the left here is the monthly. The prior month's lows were around that 80 area, which is a very, very key order flow area that we saw in the past weeks actually sustain bid and offer. So into that 80 area, low 80, high 70s is an area that we have to watch very closely today, as it's the current bottom of the overnight session. We're still in a bearish move, right? We're below yesterday's value. We're below a lot of yesterday's large volume that was created around the 4305, 4310 area. There's a plethora of volume in that block, so that's going to be a major resistance for any prices that lead up into that. And we're going to try to open up the downside realistically. Anything back above that level, above the low 4300s, there's going to be acceptance to the upside, where I would expect a little more pop in the market. But again, remember, we do have the Opex, so I'm going to be very diligent and just play key levels. Some key levels to watch for are 4280 down to 77. We also have 42.63s to 65s. We have 42.52s to 55s and 42.45s. Down below, 42.30 to 35 is a very important area that starts a very key distribution block to the downside. Anything above 43.05 to 08, right, we can start looking at that 15, that mid 20, right, and so on. But these are just main key levels, right? Looking at this from a directional perspective, I'm not like, nothing's really hitting my eyes right now except for sellers are going to want to sustain this. So any rally is most likely trying to get sold to continue this downside wave. A lot of that can be disrupted by Opex, so keep that in mind. So I'm going to be trading smaller here when we open up our live trading room today, and we're going to take a look at what it is that we got, and a very rule-based approach, level-based approach today with somewhat neutrality, somewhat a lean slightly to the bearish side. So if we start popping from this low 80, right, and we just go monster bid in the first 10 minutes of the day, you have some directionality under your belt in that case. And with that being said, I want to bid everyone an amazing weekend. I hope everyone has a great time. And sorry for yesterday with the audio, kind of got crapped. And ideally, you guys like this format of screen sharing so you can see what I'm looking at when we talk about plans. And maybe, right, next week when we start looking at these big tech earnings, we'll have some of the screens up on individual names. So enjoy the weekend, everyone. Thanks for watching. I appreciate everyone that stepped in to tell me that the audio is good today. Today I was paying attention, right? So let's open up our live trading room. I'll see you all in there, and we'll chat on Monday. So thank you and take care. Oh yeah, remember, last thing, we started our recording of the second part of our futures course. This is what I was saying yesterday. We had the first lesson of part 2 yesterday, where we're doing a deep dive in a more actionable, hands-on approach of how to actually trade futures, along with a psychological approach as well. We're going to do a few lessons on trading psychology so you can get to that next step in your journey. And we're going to continue with the recordings live next week, so go and check that out on the website. There's also a 3-day free trial floating around in the